it comes down to terminology to some extent. Like the term like Bitcoin native, to me, that would mean everything is executed on Bitcoin mainnet. And what that would say is that Bitcoin has changed its architecture sufficiently that you can actually do financial transactions on it. So right now, by design, it's impossible. Effectively, like a 10-minute block time and finality being longer than that means that you'll never be able to do like high frequency trading on Bitcoin unless that block time and the entire architecture changes. You probably will never see that with a proof of work chain like Bitcoin.
And we're back, and I'm here with Callan Sarre, who is the co-founder and chief product officer at Threshold Labs. Callan, thanks for joining. We interviewed Callan last week at Korea Blockchain Week, and in that interview, we covered all the basics of Threshold Network, the wrapped tBTC, the wrapped Bitcoin it enables, tBTC, where that tBTC lives, and what people are doing with it. I'd encourage everyone to go back and watch that full interview to get the full picture. But for the benefit of our audience, Callan, could you get us caught up? Just give us the high-level overview of Threshold Network and tBTC.
Yeah, absolutely.
Thanks.
So thanks for having me on again. It's great to see you. So Threshold is a network of nodes that basically allows us to mint this decentralized wrapped Bitcoin asset called tBTC onto Ethereum, Sui, Starknet, Solana, any destination that you'd want to use your Bitcoin, basically. And we differentiate ourselves from other wrapped Bitcoin products by the fact that we're a fully permissionless product and our custody is custodied in a decentralized way via these nodes. And what that enables is really low friction entry and exiting between Bitcoin and DeFi without needing to go through a centralized entity, through a KYC custodian or anything like that. You can simply bring your Bitcoin, deposit it via Threshold and take your tBTC and go and use that in DeFi. So we've been around since 2020. The V1 went live in 2020, V2 in 2023. And since then, we've grown to about 700 million TVL, steadily growing as the DeFi space for Bitcoin continues to grow. And we're focused primarily on building the real Bitcoin economy and what that looks like and how we create a legacy of Bitcoin use and utility in global finance.
All right, great. Thanks for that. So in our interview last week, you mentioned about Threshold's integration with MezzoChain, which is a Bitcoin lending app chain. Could you go into that? Like, is that different from the wrapped Bitcoin tBTC that's put on Ethereum? What's the difference?
It's actually the same asset, which I think is quite interesting. Because being a wrapped Bitcoin, like we have the Bitcoin kind of staking side down in the fact that you have your Bitcoin, it's locked and it's redeemable for tBTC. So then you can use the programmable logic of programmable chains like Ethereum or different virtual machines and impose the staking logic in smart contracts on that chain. So there's this approach of doing like native Bitcoin staking, which we've seen other projects do, like your Babylon, things like that, where they have like a Bitcoin locking mechanism on Bitcoin mainnet. And what we've done is solve for the Bitcoin custody side by a Threshold network, and then enable these staking products on mainnet, on these other chains. So what Mezzo has done is taking the tBTC asset in the programmable sense and relying on the trust guarantees that Threshold is providing on the Bitcoin custody side, and then they're doing their own staking mechanism on their own chain using tBTC, which is effectively the same as staking Bitcoin, using Bitcoin as the security asset for consensus on that chain. And instead of it being on Bitcoin mainnet where it's locked, it's being locked at the tBTC level, at the smart contract level of the system. And then Mezzo has used tBTC as a staking asset in their protocol to secure it with Bitcoin, and then enabled an entire Bitcoin ecosystem on top of their chain with tBTC as a native gas asset like you're using Bitcoin.
Okay, very interesting. So the way I'm understanding this is you've got, on the one hand, wrapped Bitcoin that lives on Ethereum or EVM chains or other chains, and then on the other hand, Bitcoin side chains. Is that a decent way to separate between these two ecosystems?
I think that's a good distinction to make. It's subtle, and if people aren't intimately familiar with this ecosystem, maybe it's not obvious. But you might have like a Bitcoin L2, which has its own Bitcoin connectivity. They have some kind of blocking mechanism or some kind of relationship with Bitcoin mainnet. And all of these chains are kind of just that in name only at this point, because we don't have functionality to verify these proofs on Bitcoin. So that's why people are talking about BitVM as a way of proving proofs on Bitcoin of off-chain states. And when that comes online, then you have these L2s that can prove their state to Bitcoin, and they kind of roll up to Bitcoin in that sense. And each of these L2s, they want to do their own wrapped Bitcoin asset. So they want to do what Threshold is doing, but for one particular ecosystem. And I think this is a real issue in terms of liquidity fragmentation and inefficiency in the market, that even if all of these chains do well independently and they grow and scale their TVL and create meaningful Bitcoin value and volume on their chain, then it's still going to be fragmented from these other ecosystems that want to do exactly the same thing. So instead of Threshold being pinned to one particular chain, we're actually going across the whole board, and we're providing that Bitcoin connectivity layer to all of the destination chains, places that don't want to be a Bitcoin L2, like Ethereum or Solana or these other chains. And we get a much more efficient liquidity landscape as a result of that, because instead of having these fragmented assets per chain, where if you want to interchange between them, then you're getting slippage or transaction fees or whatever it might be, you can actually go directly if you're going to use tBTC. So we're trying to unify the liquidity landscape between these different destination chains and encourage them to use tBTC as their gas asset or as their collateral asset, because we'll be able to scale the economy, Bitcoin economy, much further in that way, in our perspective, rather than seeing this fragmented landscape.
Okay, so Bitcoin-native DeFi, you're saying it's only that these Bitcoin L2 side chains, whatever, they're only that in name right now because something is needed in order to actually make that possible. So do you think that when that is actually possible, that the Bitcoin native side of things will actually start to replace the wrapped versions of Bitcoin?
Well, it comes down to terminology to some extent. Like the term like Bitcoin native, to me, that would mean everything is executed on Bitcoin mainnet. And what that would say is that Bitcoin has changed its architecture sufficiently that you can actually do financial transactions on it. So right now, by design, it's impossible. Effectively, like a 10-minute block time and finality being longer than that means that you'll never be able to do like high-frequency trading on Bitcoin unless that block time and the entire architecture changes. You probably will never see that with a blockchain like Bitcoin, at least in the short term. So anything that's like Bitcoin native or being marketed as Bitcoin native right now, a lot of the logic and execution, that will all happen off Bitcoin chain. So it might be native in the sense that it interoperates natively at the L2 layer with the protocol, with Bitcoin, like if they have a side chain or they're proving their state back to Bitcoin mainnet via BitVM or one of these upgrades. But without that, the term Bitcoin native is really just referring to these chains that have close proximity to Bitcoin or deep integrations, but they're not actually on Bitcoin mainnet per se. There's still off-chain trust, off-chain execution that takes place at some level of the execution process. So there might be a moment where your Bitcoin is not purely under your control in the sense that you're authorizing somebody else to perform transactions on this side chain, which then settles the Bitcoin mainnet. Much in the same way that we're all doing it now, using tBTC or other wrapped assets on Ethereum. Because these are interchangeable with Bitcoin mainnet, it all matters when settlement actually occurs, like when you're actually taking a Bitcoin and settling it back to Bitcoin mainnet. And I think these L2s and these native Bitcoin experiences want to bring that settlement time much lower and bring it closer to Bitcoin mainnet, which is also something that Threshold will do as well. In the fact that these technology upgrades are things that we're exploring and will probably integrate at some point. We don't necessarily want to be forced to do that, given we have a large capital base already allocated to Thresholds. But these are things that we can integrate at the protocol level. As it stands, based on the technology that's built, we have the best solution for Bitcoin custody and Bitcoin interoperability with DeFi. And while these things develop and they get finalized, BitVM2 or Opcat upgrades on Bitcoin mainnet will enable a new ecosystem. And we'll explore that technology when the time is right.
Okay. So last week during our interview, we had quite a few good comments from in the posts on X. One of them was from X user Truth Seeker 28, and he his question was, tBTC bridges Bitcoin into Ethereum DeFi ecosystem without centralized custody. As Bitcoin L2s mature and native smart contract layers emerge, how will Threshold ensure it remains the preferred cross-chain liquidity solution rather than being displaced by native Bitcoin DeFi protocols?
Yeah, I think this marries really well with the conversation we were just having, and I think the short answer to that is by being agnostic as to the execution environment. So whichever chain, like be it Ethereum or Solana or Sui or Starknet or Mezzo, whether these chains, they want to do the execution, they're building their liquidity pools, they're building vertical integrations to do integrations for user experience via apps or whatever it is. And beneath the hood, Threshold is doing the Bitcoin settlement effectively. So we're providing the guarantees that Bitcoin is underpinning this financial system that is being built in these execution environments. And any L2 or other chain that wants to do the same, they're effectively trying to build their own economy, their own liquidity, all these things. And I think that's great generally for space. Like, let's all build Bitcoin use cases. But when it comes to meeting the need and the scalability of global finance and Bitcoin at scale, I think we need something that interoperates between them to make things more efficient. And Threshold is positioning ourselves for that, where we can be agnostic of the chain beneath it, but make sure that we're providing strong finality guarantees for Bitcoin finance.
Okay. So you said that the TVL of Threshold Bitcoin, tBTC, is around 6,000 BTC. Is that correct?
Yeah, it's 6.3 since we last spoke.
Okay, so it's a steady organic growth, I think is what you said. And what are the strongest drivers of that growth today? And is it like integrations? Are there incentives? Institutional adoption? Where's the growth coming from?
Yeah. I mean, I think it's a really interesting point to contextualize ourselves in like Threshold's growth and the industry's growth generally. In that when Threshold was starting, we did a lot of liquidity bootstrapping. We took tBTC from 0 to 700 mil TVL as it is now. And that took us incentivizing on-chain markets, like distributing T-token. And that's still an ongoing program. But our strategy has shifted away from token incentives, which I think is an amazing innovation that DeFi has created, but it's just a short-term solution to an ongoing problem of how do you establish a new market? How do you it's like creating a global stock exchange on these decentralized protocols, and how do you ensure there's liquidity and management and sufficient depth and low slippage and all of these things on that market? So bootstrapping is a great way to kind of get your retail people in or people that are kind of more hobbyists. But then when concentrated liquidity management has come out, you start to see these sophisticated shops with real strategies and real management history and practice executing their strategies in these decentralized markets. So managing the on-chain liquidity and making money for themselves. So I think taking it from an emissions type model and putting it into the reality of like, we need sustainability. We need to have an ecosystem that thrives on its own merits, not based on token speculation. And that's what Threshold is primarily focused on now. And what we're building is sustainable pockets of the Bitcoin economy. And that means bringing these sophisticated market makers, these capital allocators, these people that want to use Bitcoin and generate Bitcoin yield and connect the different dots of the Bitcoin economy, like whether it's a C5 product that's using tBTC under the hood, or if it's a purely DeFi strategy trading on a particular market. All of these use cases can be enabled and connected via Threshold, which are basically just rails to connect those pieces together. And so we enable all of these different user types to come on board. So whether it's somebody, an institution that wants to do active liquidity management on a decentralized exchange, or it's more on the kind of yield strategy side where people are using their Bitcoin to borrow stable coins and then executing some kind of basis trade strategy or some other kind of stablecoin based yield strategy, then converting that back into Bitcoin. So we really enable all of the use cases out there. And I think that the institutional adoption curve is going to start to see more of these different use cases taking place.
Okay, so let's move on to the governance and execution. So you described Threshold DAO streamlining the governance and moving product execution to Threshold Labs. So now that this transition has had some months to play out, what's working well?
I don't want to be get too ahead of myself and say all of it, but compared to running product execution strategy via a DAO versus having a centralized entity that has some ownership over the decision making in terms of like day-to-day management or product strategy. And the DAO serves its purpose by kind of ensuring all of the checks and balances are made. The security is up to scratch. There's this governance process that ensure all of the checks and balances are taking place throughout that process. So it's not just like Threshold Labs, our execution entity, just pushing updates onto Threshold Network. It still goes through this decentralized governance system. And I'm personally really thankful to have that. So as a labs company, we go through all of the due diligence that we need to do. We go through the audit process, do our security checks and all of our QA testing and these things for new features. But then we also have the DAO that has its own objective of securing the protocol that is actually independent of Threshold Labs in itself. So it needs to check against us as well. So we have these layers of security that guarantee that things are being upgraded from the protocol have gone through this rigorous process to ensure that. So I think having this separation of like risk management, protocol or liquidity management and these things independent of a labs entity, and then having the labs entity strongly aligned to best outcomes for the network and the token holders by creating the products that people want to use. I think this dual model is how we're going to see most decentralized products come into life, with centralized execution, but then decentralized management to ensure that we don't have these honeypots, central points of failure that old products have.
Have you noticed any trade-offs in terms of this model?
Yeah, I mean, I think the biggest trade-off has been like the community itself, which has taken a hit. It's when you have like a more open DAO structure, it's just more kind of like jobs that people can do or committees and things that people can join. And while these committees, were operating in the best interest of the DAO and perhaps weren't as efficient as the old structure, as the new structure, I should say, it did create a really strong sense of community, a lot of people involved and a lot of decision-making and kind of open governance that takes place.
Perhaps more advocates organically growing.
Exactly, like more ways to get involved in a practical sense. Whereas now it's more limited to the governance side of things, and there's the threshold committee and people can still participate and be elected into that process. But there are less seats available. So the community, in terms of like those that are actively day-to-day working on Threshold has shrunk somewhat, despite us still having like a strong brand presence and awareness. I think like the kind of social fabric has changed to some extent. But that has also created more abstraction between execution and management, which I think is healthy from a security perspective.
Okay. All right. As we move towards wrapping up, let's talk about the roadmap and competitive landscape. So you said Threshold's revenue model today is bridge fees, but we'll shift towards structured products and yield strategies. Would you be able to share any examples of products that you have in mind or that are in development?
Yeah, certainly. I think most of what we have is still like before the official announcement, so I won't get into the specifics. But a good example is something like a vault strategy, like I was talking about, some kind of liquidity management strategy that to a user is a yield product effectively that says this is the amount of Bitcoin or the return that you could expect. Here's some of the long tail history. This is the APY over time. Here's the strategist that's managing this, and here are the venues that it's deployed on. And then simply from a user perspective, it's just a Bitcoin deposit in and a Bitcoin withdrawal when you want to take your Bitcoin back out again. And on the back end, you have some kind of manager that is executing a strategy that might be managing liquidity on chain or doing some kind of a borrowing strategy.
So it sounds a little bit like something like a Morpho, where you've got a pretty simple front end. You're just like, okay, I want to lock this up. And you in the back end, there's these strategies being deployed. And from the user's perspective, all you have to do is say when you want to deposit and withdraw.
Yeah, it's effectively that. Although I would say it's not, it's more like using Morpho or using Uniswap or using Aave as opposed to creating a parallel protocol. So a manager might have a strategy that they're deploying using Morpho or a vault they're managing there. And at the user level, it's just abstracted into a nice, like, simple onboarding process. But beneath the hood is sophisticated management happening.
I see. And so I may have missed it. How do you what's the revenue model there for Threshold as opposed to bridge fees?
Yeah, it's basically like setting up the vault and supporting the capital onboarding process, and then doing some kind of fee split.
I see. So like a management fee for managing the capital.
Yes, see something on those lines.
Okay. All right. So how do you view competition from centralized custodians, the big ones like BitGo with tBTC on one side, and then these experimental Bitcoin L2s on the other? Are you stuck in between those? You've talked about like Threshold trying to provide this liquidity layer so to work with all protocols. Is that really it, or is there anything deeper?
Yeah, I think this is a big piece that we're working on at the moment is how do we bring these two sides of Bitcoin economy together, where we have this kind of more centralized custodial model, and we have the decentralized version as well. And really, we're in a position where we can bridge both sides, which we're very excited about. We have this potential custodial integration that supports qualified custodians and using tBTC from that venue. And then rather than a BitGo or a Coinbase or something like this, that they have their one custody provider and their one onboarding flow or whatever it might be, we can unify the ecosystem of custodians and create this liquidity layer across that custodial landscape as well. So I think there's an opportunity to tie all of these pieces together and create more interoperability. And then ultimately, we want Threshold to be the settlement layer back to Bitcoin native, where all of the transactions, all of the high frequency trading or the business logic can be encoded on chain using tBTC, using this programmable Bitcoin, and then settlement always having the capacity to exit that tBTC back to Bitcoin mainnet with strong finality and strong security guarantees, such that the whole Bitcoin economy can be built on these rails and also be able to get back to Bitcoin mainnet. Because I think that's the main thing here is if you want Bitcoiners or people to trust the program generally, then they need to be able to get their assets back to a secure venue in crypto, which is Bitcoin.
Okay. All right. Callan Sarre, thank you so much. Very insightful.